Welcome to Know Your Money, where we will explore our relationship with money and how the psychology of it impacts our financial decisions, as everyone thinks about money differently. In our podcast, we'll be presenting a variety of financial topics in an easy-to-understand way, which we hope will assist you with managing your money. Hello, everybody. Welcome to Know Your Money. Guys, how are you today?
Oh, that's hard, Craig. I'm going to go first. Very well. And you, Bronwyn? Craig? You're looking great.
All good, thanks. Hi, Warren.
Hello,
Who's in
everyone.
the studio? Somebody else here today?
Yes, so today we have Candace Duplessis from Allan Gray. Candace is our business development, but she'll explain a business developer, and she will just explain a little bit of what that is and what her other role is at Allan Gray.
Hi, everyone. I'm so excited to be here. I am the Assistant Regional Manager in Johannesburg in our distribution team, and I'm also a Business Development Manager. So essentially, I support independent financial advisors, and I help them develop their businesses.
Awesome stuff. And that's definitely the reason why you're here today. It's not just to help us develop our business, but it's to help our clients develop the best that they can or make the best use of things. So the reason we have Candace here today is because tax season is coming up, and we just found that you've got to make the most of your taxes. And what does that even mean? What should you be putting it in, and what are the different kind of products? So, Cans, I don't know if you want to start somewhere and just explain that.
Sure. So it is probably the busiest time for financial service providers because you have until the end of February to basically use up your contributions within a retirement annuity and a tax-free investment. And I'm sure we're going to unpack that shortly. So you have until the end of Feb to basically use up your contributions for a tax-free and an RA.
Okay, awesome. So I think let's start with the easy one, which is a tax-free. What is it, and how can people use that up? What are the things?
Sure. So I'm sure everyone knows that as a country, we have a very poor savings culture. And in 2015, National Treasury came up with this product, which is called the tax-free savings product, because they wanted a product that would encourage people to save. So you can put up to 36,000 Rand into this vehicle called a tax-free savings account per year. And this runs from 1 March to the end of February. You don't have to put 36,000 Rand. You can put anything less. It is a long-term savings tool. And the benefit of this product, as the word says, it is tax-free, which is an amazing opportunity for you to put money into this product. And ideally, you want to forget about it.
But that's one important thing I think you said, is a lot of people use this as their emergency fund, but your tax-free should be a long-term investment.
Just so I understand it. So it's tax-free on the amount you put in. Is it capital gains tax-free?
Every tax.
Every tax. So you don't pay any capital gains tax. You don't pay dividend withholding tax. There are absolutely no taxes.
Free money.
But people often use that for the short-term things, and there's actually a restriction. So first of all, it's restricted to 36,000 a year. Then it's restricted to
500,000 in your lifetime.
Oh, okay. So you can't just start it when you're like 17, 18.
And you can't just throw thousands and thousands in it.
Okay,
there is a restriction, but it's important to make use of that. Like when you're doing your financial planning foundations or your blocks, this is one of those important areas to start at. But saying it again, it's a long-term saving.
But I think if you start, we look at the maths, back to the snowball down the mountain, compound interest, how important that is. If you start it young, and let's say you contribute the maximum every year, it'll take around 16 years for you to get to the 500,000. That's about that.
Does the fund have to close then, or can it continue to accrue capital gains?
Correct. It continues to accrue. So you save for, I think it's 13 years or whatever gets you to the 500. You stop saving because you can't,
put more into.
Yeah, because let's say Treasury hasn't increased it.
Yeah,
and you at your maximum, and then you just leave it there, staying in the product to continue growing.
That's going to be a lovely retirement pot, isn't it?
Exactly. So that's a one very good way of doing that as well. So the tax inside the product is the same as a retirement annuity.
Correct. So you absolutely pay no
No
tax
tax.
within the product. So to make this real is if you put money into a unit trust and you put money into a tax-free as an example, and remember we spoke about this concept, unit trust funds, and let's say your fund performed and it did 15% for a year. That's your return. In a tax-free product, you would take home this 15%. Like that would be your return on your statement because there's absolutely no taxes within the product. Whereas if you put it in a unit trust, it would be slightly less because you experience tax within the product.
Yes, I understand, yeah.
And another unique feature on the Allan Gray tax-free is that you are able to nominate a beneficiary.
Correct. It is a unique option that we offered. We opened it in our life company, which allows you to nominate a beneficiary. So what that essentially means is if you pass away, we can pay your tax-free monies to your beneficiary, and it basically it would form part of your estate, but you won't pay any executive fees on the product.
So you don't have to wait 5 years or anything like that.
Correct. You don't have to wait for the estate to be wound up. We can pay immediately to your beneficiary, and they can decide whether they would want to open their own tax-free or if they would want to basically withdraw the monies.
So the premiums you pay monthly, are those tax deductible?
They are not.
So therefore you consider an RA.
Correct. So a retirement annuity, which is also, it's the most tax-efficient vehicle offered in the market. So even though the tax-free, you pay no tax within the product, the retirement annuity is basically more tax efficient because SARS actually gives your money back. They want you to contribute towards retirement annuities. So essentially you pay SARS less tax if you put money into a retirement fund.
Are there restrictions on how much you can put into an RA and how does that work?
Yes. So it is 27.5% up to 350,000 Rand a year. And you can put more than that. But that would be
disallowed contributions.
Yeah,
you can go back and listen to that episode.
Yes,
it's a fantastic episode. I listened to it myself.
Awesome, thanks, Candace.
And then Candace, can you nominate a beneficiary on a retirement annuity?
So we actually refer to it as a nominee. So you can nominate what we call a nominee. So you would indicate who you would want it to be paid out to in the event of your death. But it is subject to what we call Section 37C. So if you pass away before you've retired, the trustees of the fund would then do an investigation and they would check that if you have any dependents. In the absence of any dependents, they would then pay to your nominees. Then they would become beneficiaries because they would actually benefit from the product.
So that's similar to a pension or a provident fund. If somebody
100%.
passes away, the board of trustees will make sure that who's ever nominated is the correct people to receive the proceeds. Is the same as a retirement annuity.
Correct, yeah. Okay. So dependents are always first. If anyone was dependent while you were alive, they considered first, and then we consider your nominees.
So essentially, you would have both, wouldn't you? As financial planners, you would encourage people to have both of these, a tax-free and an RA.
Absolutely.
Okay.
Because the retirement annuity, it's going to save you tax while you're contributing to it.
Correct.
You can't get hold of it, though, until you from 55 onwards. So you are restricted to when you can use the money. However, on the tax-free, you're not going to get the deduction, but you can get it earlier.
Yeah,
but
you
both
are
of
limited
them,
to the contribution.
Yes, and both of them are not taxed. The product isn't taxed, so it's an incredible way of building wealth. Same as compound interest. It's a really good way of
snowball, eh?
Yes.
100%, yeah.
And then just in terms of the funds, like, are you restricted in your tax-free and what funds you can choose and in the retirement annuities?
Fantastic question. So in your tax-free, there's a specific funds that we give you access to because as part of the product offering, the funds have to have what we call a fixed fee, the unit trust funds that you're exposed to. So we usually have a separate list of funds that you can access because these funds they must have a fixed fee within a tax-free product range.
Is that a legal thing or is that
Correct.
your
What is a
policy?
fixed fee?
It is a legal thing. So essentially it means we've got, as an example, the Allan Gray balanced fund. So we've got two versions of the fund. In the tax-free product range, we've got a fixed fee. That means we have to charge you one fixed fee. We can't charge you less or more to manage the
Performance
fund.
fees.
So no performance fees allowed, right?
100%.
Do you know what that is?
What is a performance fee? Sorry, I'm going to jump in.
So it is actually one of our values at Allan Gray. So Allan Gray, our founder, he put this in place. So he felt strongly that if we, within the fund, if we perform well for a client, we would charge a performance fee because we've done well for you. So a portion of your performance we would take.
Is that as a percentage?
Correct.
Okay.
And then if we have not done well for you, then he feels strongly that we shouldn't take a fee then.
So you have incentive to do well for me.
Exactly.
That's a good way of doing it, yeah.
That's exactly the reason why we have that in place. So there is an incentive for our portfolio managers to do well. Whereas with a fixed fee, that fixed fee is in place whether the investment manager does well or not, he takes his fee.
And that's legislation, right?
So for the tax-free, yes, it's legislation that they insist for the tax-free product. There's no performance fees. That's why we actually had to open a second version of the Allan Gray Balance Fund with a fixed fee.
Can I ask one question, just so I understand? Does Allan Gray get taxed on their fees from the tax-free? So the income they create
Yes.
from their fee structure with the
Yes.
tax-free saving for an individual,
Yes.
do they then pay tax on that?
Yes, because that would be seen as revenue
Okay.
for our company.
Okay, so someone's getting taxed.
Yes.
Always.
Yes.
yeah.
But in this case, it wouldn't be the investor.
Yeah.
So
yeah.
Candace, Bronwyn also mentioned the RAs, or can you invest in any fund within the
Correct. Yes. So we've got a fund list. And in this fund list, there would be you would have access to performance and fixed fee funds within that fund range.
RA? But we're asking about any fund, so I could put all my money in gold.
Regulation 28. So Regulation 28 is a law that was put in place. I think it was 2012. And essentially, this was a rule that our government put in place because they didn't want you to take too much risk with the money in your retirement funds. So essentially, they limit how much money you can place offshore or into equities. So this is called Regulation 28. So as an example, for equities, you're allowed to put in 75% of your assets. So
Is that the maximum?
That's the maximum. So your account post-2012 always has to be Regulation 28 compliant.
And the list of funds on the Allan Gray platform complies with that within the RAs, right?
Well, they'll say, yeah. So if you try and invest at Allan Gray in one fund and it isn't Regulation 28 compliance, they'll say you're not allowed to invest in this. You have to change.
And is that the same for other vehicles like endowments and stuff like that?
So Regulation 28 doesn't apply to endowments, but there are funds that you can access in the endowment that are Reg 28 compliant. So when you look at a fund fact sheet of a fund, it actually has a little table and it tells you, is this fund Regulation 28 compliant or not?
So it'll automatically comply. The fund will automatically comply.
Yeah.
It'll never go over. Yeah.
So I think back to why we were doing this episode, we said that it's like February, what should people be doing? What exactly should they be doing? And like sort of how or why with everything that we've said.
So I'd encourage you to speak to your independent financial advisor to determine ideally what the maximum is that you can put into your retirement annuity or into your pension or provident fund. And if you are in the position to, I'd encourage you to absolutely put in the maximum into your retirement fund because that is the best way of how you can get money back from SARS.
Or reduce your liability.
Correct. So that would be definitely the first thing. And the second thing, if you are in the position to maximize your tax-free product, I would put in 36,000 Rand if you are in the position to. And some clients even do it on a monthly basis.
And you can do it for your children, right? So you can do 36,000 for you, your spouse, your 5 children, 36,000 into each of them.
Absolutely. But the one thing to keep in mind, though, we spoke about flexibility and Craig mentioned, there isn't flexibility within the retirement fund. you can only access it at the age of 55. There are some rules where you can access it before, like if you immigrate, etc. Whereas the tax-free is flexible and you can access it at any point. But something to keep in mind there, we mentioned earlier about the 500,000 Rand that you can contribute over your lifetime. So it's the 36 per year, but 500 over your life. And we often see that people misuse the tax-free product in the industry, and when they need money, they withdraw from the tax-free. And I think this should be avoided at all costs, because what happens is when you withdraw from the product, and I'll use an example. If I put in 10,000 Rand this week, and God forbid something happens, and I need this money next week, and I take this 10,000 Rand out, not only have I not experienced the tax-free element or the tax benefit in this product, but now I've also reduced my lifetime limit from the 500 to 490,000. I can never get back that ability, that 10,000 Rand any longer. And I think that's a really big thing. So people need to consider that when they put money into the tax-free, that it is literally the last place you want to touch when you want to access money.
Very important that, yeah. Yeah.
And also I think another important thing to note is that if you do it for your children, and you had to, last resort, access that money, that child needs a bank account, right?
100%. So SARS actually has a ruling. So when you open a tax-free savings for a minor, yes, the parent obviously contributes to this. So where Craig mentioned you can reach that within 13 odd years if you put in 36,000 Rand every year. And then that money just sits there and it continues to grow. If the parent decides that they need to withdraw that money for whatever reason, it has to pay out to the minor's bank account. So the minor has to have a bank account, and we can only pay it to the minor's bank account. And that's a ruling from SARS.
All right. Jeez.
So I think it's important this time of the year to look at what you're putting away into your RAs. Do you have a tax-free investment or not? And to contact your financial planner and put that in place before the 28th of February.
Awesome stuff.
Guys,
Thanks, Candace. That was
Candace.
amazing.
Pleasure.
Very
Thanks, Candace.
informative.
All
Thank you.
good.
Lovely to have you on the show.
Thank
Great.
you.
See you soon.
Bye.
Bye,
Cheers.
everyone.
Thank you for listening. If you have enjoyed this podcast or would like to subscribe, please visit our website www.growthfp.co.za. The information we have provided in this podcast is our personal opinion. For more detailed information, please discuss your financial situation with a financial planner.